Hello and welcome to VC Circle podcast. I'm your host Joseph Rai. In this episode, we will be in conversation with Shrikant Sundarajan, partner at Ventureast, which has been making venture bets since 1997. The venture firm is currently investing out of its sixth fund, which is a technology-focused fund called Ventureast Proactive Fund 2. Ventureast's investments include customer analytics and cross-channel engagement platform MoEngage, insurtech startup Acco Technology, fintech startup Kisht, and education services firm iNurture. Hi Shrikant, welcome to our podcast and thank you for joining us.
Hello Joseph, always a pleasure to kind of interact with VC Circle. Look forward to this podcast.
Let me start by asking you as to how Ventureast has been engaging with its portfolio companies during the lockdown.
Good question. Actually, one good thing going for us was quite a few of the companies other than the fintech-oriented companies were digital only. And that actually resulted in not too much of a loss of business. So that was one really good redeeming feature. So call it serendipity, call it clairvoyance, I don't know, but these investments have done well. And in some cases, they've done even better because of COVID, especially if you look at Care, which is like a digital health platform where online consults or the kinds of interactions that we are having right now on Zoom.
Right.
All these things have taken off quite a bit when it comes to healthcare. Mm-hmm. So actually provided good tailwinds. If you look at our edtech company, iNurture, they were also investing a lot in online-oriented kind of interactions for students and faculty, and probably other kind of avenues like perhaps employers, as well as basically rating mechanisms for students in terms of how employable they were. Mm-hmm. That's all also been doing fairly well in terms of number of students actually preferring it and liking it given the COVID situation. Right. So all in all, I think we have been kind of encouraging our portfolio companies to actually kind of focus on the digital side of the story, focus on online, make sure that they start to kind of get more connects, increase and improve offerings and revenue lines, which all of them have done. And they've actually kind of yielded some very, very good results from an operations perspective. If you were to look at the sector which got hit a little hard, which was basically fintech, which is lending and kind of rural assisted commerce, which is Boonbox, that required a little bit of special handholding where we had to make sure that they stopped any kind of additional expenses, made sure that they were running a very tight shop so that they could actually extend their runway. And they've actually been following up and doing that. But it's going to be a little tough for that segment, at least in the short term.
Okay. So will you do a follow-on in some of the companies to help them sail through this crisis? So
in all cases, again, call it clairvoyance, serendipity, in all cases we were able to actually organize some funding by December of last year. So all of them are on at least a decent platform or runway, and we've actually started to also explore other avenues of actually providing a little more financing so that they can actually survive between 18 months to 2 years.
When you said other avenues, could it also mean venture debt?
It could be a combination of venture debt. It could also be a kind of a bridge loan from all the existing investors. So we are in good shape there.
And are some companies in the midst of doing bridge rounds or raising venture debt now?
Yes, there are. At least there are 3 companies which are doing it. And the interesting thing is there are another 3 companies which are actually attracting external investments itself, brand new equity rounds. So those are good signs.
Ventureast has been quite quiet on the investment front this year. Was it a conscious decision because of the COVID, and will we see it picking up pace in the coming months?
No, actually, if you look at the corpus for this fund, the investable corpus is a little bit below 70 mil, right? So we are, as I told you, we are pretty much 2/3 of the way done. So at the max stop, you might see another 3 or 4 new investments coming up. So that's why probably it feels that way. But we've already done 11 investments from this fund. I think we'll probably do another 3 or 4.
So what are some of the sectors that you will chase from the remaining fund you have?
So I think we are very gung-ho on this whole notion of Make in India, and the fact that like the manufacturing segment and the MSME segment is going to actually get a lot of attention. So we want to look at manufacturing 4.0, which is all the IoT embedded solutions. We want to look at agri-tech because we feel that I think that's an untapped market. We want to take a look at health tech and education again, both from a AR, VR standpoint, because especially health tech, we feel that there is a lot of room for very cool kind of hardware, software kind of solutions, especially in an emerging market like India. And the fact that now we will be kind of reliant more on indigenous devices, I think it makes it a lot more exciting. So we are looking at those segments in addition to what we already look at.
What are some of the themes that you see emerging out of this pandemic that venture capital investors like you will be really excited about?
Yeah, I think so. I think the entire world will go through a revolution in terms of what can be done digitally, what can be done without contact, right? So, for example, I feel AR, VR, robotics, IoT, sensors, unmanned vehicles. These are all very interesting things which are going to kind of impact the way we live and the way we interact with enterprises, be it our banks, be it our insurance companies, be it our automobiles, be it how we manage our households, groceries, energy. So I think there'll be lots of interesting kind of companies emerging, and something which we should track, which we are doing. For example, if you look at this company called ACO, I think we are going into what is called the micro insurance, where like when you want to do something, that's when you insure yourself, right? That's a very cool concept, right? Or when you want to go into for a surgical procedure, we will kind of cover you, right? Provided everything is okay. So these are very interesting ways to look at like traditional products, right? Which will get disrupted. So I feel being digital, relying a lot on smart data, which is basically data that's kind of fed into machine learning models, and then you have essentially rule bases which are AI driven to kind of drive a lot of decisioning. Interactions are going to be hot. Next generation interfacing in terms of devices, which could be AR, VR, which could be things like your Google Glass, your Samsung Glass, or Apple's coming up with some stuff that'll be good. The way medicine gets delivered, the way geriatric care or home care will be provided tomorrow, the way hospital ICUs will be managed with the smaller staff, the way vehicles will be kind of managed, like you talk about ships with the smaller staff. Lots of things are going to change. So I think technology is going to play a bigger and bigger role, be it robots, be it like other ways of it. And then the other big thing is, of course, 5G. You can never forget 5G. It's around the corner. You've got to have a lot more data flying around. And if you have data flying around, you need infrastructure. If you need infrastructure, you need security, all kinds of good stuff.
I wanted your take on valuations. Some of the VCs whom I spoke with said that valuations are modest. Some said that valuations are frothy, while some said that it depends upon some of the sectors. What is your take?
My thing is slightly different, because if you look at like the history of Ventureast and where we all come from, we were all entrepreneurs first, Joseph. You got to understand that, right? And so we take a very different look at it as opposed to a pure finance-oriented VC, for example. And so sometimes the valuation becomes frothy because a lot of people run towards something that's hot. Example, education technology, right? Up until like 2 years ago, there were lots of small players, nothing much happening. Maybe yes, Baiju broke that barrier, right? But today, everyone's kind of rushing into it. So obviously the valuations are, I would say, frothy, because you don't see the bottom and you don't know why, you don't see how people are going to invest and exit from it, right? So what we look at it is, we always kind of, so we are a little bit more conservative in the sense like if the valuation is way out there, we will not go for it, because I don't think we are going to actually kind of make any return, especially given that we are not a super sized fund, right? So we look at, as I said, like companies that are built with like in a good space with good founders, and maybe the velocity is a little slower, but like it doesn't, it's not attracting the same kind of hype or trend, which some of the larger guys with deeper pockets can actually fund. So that's where we stand. And I think after 2015, definitely the market has rationalized. And the other trend we see is like if someone is kind of been a success and they've attracted capital, it attracts more capital. But again, that is something where we cannot play, because by that time it's already Series D, E, F, and so the big boys participate. So it's not of real interest to us. So we still like to play early, which is pre-Series A, Series A, and Series B.
Do you see a lot of M&As happening in the market and Ventureast getting an exit in the process?
Yeah, so actually we have some inbound inquiries going on. The answer to your question is yes. Basically what's happened is some of the businesses are subdued, but they are really good assets. And it's a good time for larger companies to pick up these assets. People who have not actually kind of made some forays into the digital world. This gives them a good opportunity. So we are seeing a lot of inbound inquiries. And people want to kind of pick these assets up at a good price, and then when things open up, they probably have a competitive advantage. So the answer to your question is yes, there is a lot of M&A interest, and there will be a lot of M&A activity going on.
Thank you for your insight, Shrikant. So that's all we have in this edition of VC Circle podcast. Thanks for listening. Take care and goodbye.